Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look. I'm going to take a look at the dollar versus Canada as we head into the new trading week, into the weekend. So sit tight. Looking at the daily chart, there's a couple things that stick out to me. One is that the 100 and 200 day moving averages are near converged. They're coming together right here, somewhere around the 135-ish and change level. And when that happens, when those two moving averages start to converge, it tells you something about the market, and the market is saying that, well, we're non-trending. We're seeing a lot of up and down price action through here. In fact, the price action is getting even more confined in this small little box right here. And so at some point, the market decides that it's not going to trend anymore, that we're going to, or we're not going to non-trend anymore, we're going to trend. So that's one of the things that I start to think about when I start to see these two moving averages converge, especially on a daily chart. You just kind of prepare for something to happen, whether it's going to be a move to the upside or a move to the downside. And that's what we're going to be preparing for, waiting for. We'll see if it all pans out. Now the bias is more to the downside because we moved below the 100 and 200 day moving averages in trading last week. We also moved below the swing area, but really the two moving averages are more important in this chart. If we're able to continue that momentum to the downside, we're going to be looking to get below the 133.30 level, maybe down to 133 level. That would get us below these lows through here and below the 38.2% retracement of the move up from the 2021 low to the 2022 high. Getting below those levels would open the door for further downside momentum, and we'll see if we can break lower from there. But that would be our targets on the downside, as long as the price can remain below the 100 and 200 day moving averages. Now let's take a look at the hourly chart and see what that is telling us. And you can see the sharp moves to the downside in trading this week, helped by things like oil prices started to move to the upside. Also, Canada GDP came in stronger, which sort of brings the Bank of Canada back into play after their conditional pause over the last few months of trading. So we're seeing a lower US dollar Canada, a higher Canadian dollar, and it was a fairly big move to the downside. Also helping was the inability to move above this high in trading this week, which gave the sellers the go-ahead to sort of push lower. We fell below the 100-hour moving average right through here and held the resistance right there. And then we traded above and below the 200-hour moving average here before rotating to the downside and really taking off on Thursday in a downward direction. On Friday, we had more of an up and down trading range, to be honest with you. Not a lot going on in that currency pair on Friday, but the bias still remains to the downside below the 100-day moving average. That's this level right here, and the 200-day moving average and the 100-day moving average right here. So as long as the price can stay below those levels, the bias remains to the downside. Now on the downside, off the hourly chart, we did come into some support. That support is defined by this low, this high right here, this high right here, this high right here, this high right here. We fell below the level before rotating to the upside here, and then when the market came back down, we came back and tested that swing area right through here and found the buyers that took the price all the way to the high. And it was this week, in fact on Friday, where the market came back down to the low of this area near the 134.04 level and found support. So we have a key bias, and that's to the downside, but we do need to get below the 134.04 level. That's our next target on the downside, and that opens the door for a potential move down toward the 133.13 level, which was the low price in May. We'll see how that pans out. If the market's not going to be able to get below the 134.04 level, we could see a rotation back to the upside instead, get above the 61.8% retracement and try to work our way back toward the 50% retracement of this range from this low to this high. We'll see how that pans out, but clearly the sellers are more in control below the 100 and 200-day moving average, and we have to keep in our mind that maybe this is the one that we see a break and get outside of this trading range for the dollar versus Canada that's been confining it for so long. So there you have a look at that currency pair. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.